Welcome to Smart Stock Watch. Today is April 24th, 2025, and we're diving into the latest earnings report from Procter Gamble, a global leader in consumer goods. Joining us is Jon, senior analyst from Smart Stock Watch. Jon, thanks for being here.
Thank you for having me. Procter & Gamble has just released their fiscal year 2025 third quarter results, and there's a lot to unpack, from sales figures to strategic insights.
Revenue and profitability overview. Let's start with the top line. Procter & Gamble reported net sales of $19.8 billion for the third quarter, which is a 2% decrease compared to last year. However, organic sales increased by 1%. Jon, can you elaborate on these figures?
Absolutely. The decline in net sales is primarily due to foreign exchange impacts and divestitures. However, the 1% growth in organic sales is driven by higher pricing, which helped offset volume declines. The company also reported net earnings of $3.8 billion and an operating cash flow of $3.7 billion, indicating strong cash generation capabilities.
Earnings per share analysis. Procter & Gamble's diluted and core EPS both came in at $1.54, which is a 1% increase from last year and exactly in line with analyst forecasts. Jon, what does this tell us about the company's performance?
This alignment with forecasts suggests that Procter & Gamble is managing expectations well in a challenging environment. The EPS growth, albeit modest, reflects the company's ability to maintain profitability through strategic pricing and cost management, despite external pressures.
Segment performance and strategic initiatives. Let's delve into the performance of P&G's segments. The beauty segment saw a 2% increase in organic sales, while grooming and healthcare segments grew by 3% and 4%, respectively. What are the key drivers here?
The beauty segment benefited from innovation-driven volume growth, particularly in personal care. Grooming saw higher pricing and volume growth in key markets like Latin America and Europe. Healthcare's growth was driven by premium innovation in oral care and strong performance in personal health care.
Operational efficiencies and future outlook. Operational efficiency is crucial for P&G. The gross margin decreased slightly, but SG&A expenses declined significantly, leading to an increase in operating margin. How is P&G achieving these efficiencies?
P&G's focus on productivity savings and strategic cost management is paying off. The decline in SG&A expenses is largely due to productivity savings, including adjustments to variable compensation. Looking ahead, P&G has updated its fiscal 2025 EPS guidance to a range of $6.72 to $6.82, reflecting confidence in their strategic initiatives.
Key takeaways. In summary, Procter & Gamble has delivered a steady performance in a challenging environment, with EPS meeting expectations and strategic segments showing growth. Jon, any final thoughts on P&G's investment prospects?
P&G's ability to maintain growth and profitability amidst external pressures is commendable. Their strategic focus on innovation and operational efficiency positions them well for future growth. Investors should keep an eye on their execution of these strategies.
Thank you, Jon, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Procter & Gamble's performance in the comments below.